All right, my next guest says the worst of the financial crisis is behind us, but the economic crisis still looms large. Luigi Zingales is a professor of finance at the University of Chicago Booth School of Business, and he joins us here on set. Luigi, thanks for coming in.
My pleasure.
Let me ask you first about the too big to fail doctrine. It seems like the administration has accepted these banks as something that we're stuck with. I'm not sure if they want them or if they just think that they can't break them down. What is, in your opinion, the best way to deal with this?
Oh, the best way to do it is to create differential regulation that penalizes more the large banks vis-a-vis the small banks. Because today, the too big to fail policy creates an unfair comparative advantage, a competitive advantage for large banks. There was a recent study done by some researcher at the Center for Economic Policy Research that shows that while large banks before the crisis could borrow at 29 basis points below the small banks, today they can borrow at 79 basis points. 79 basis points below the competitors. So that's a huge difference. Now,
well, of course they're going to be too big. I mean, and they just can then get bigger and bigger on those advantages, correct?
Absolutely. This advantage has like at least two problems. First of all, distorts competition, which is bad. Second, creates an advantage for large banks that will become even larger and will cost us more the next bailout.
Why doesn't the government just say, you are too big to fail and let's break you up?
I think that there is a tradition in the United States for the government not to be involved so dramatically.
But they are so involved dramatically already.
I agree, but I think that there has not been a tradition to be so directive and split them up. But I think we have seen in the antitrust ground splitting up companies. The old AT&T was split up. I think we have not reached that consensus yet, but I think it's not an unreasonable thing to do. The other alternative, which is
but how likely is it? Come on.
Very unlikely.
Yeah. Politically tough. Right?
I think honestly, I think that much of many of the regulators are captured by the financial system, and when they end their work, they go as a regulator. They go and work for the very same banks they're regulating. So, do you expect them to be
lobbyists?
Absolutely.
The big banks tend to have big.
But this worries me because we're all talking about financial reform. We're just coming off the G20 meeting, and and all this talk about what's going to be going on with the financial firms. To me, it sounds like nothing ultimately is going to be done. We're going to have these too big to fail firms sticking around, and potentially we're going to have another large crisis. Mark Faber says, I don't know when, but we're going to have this huge crisis that will bring down the whole financial system. I mean, do you agree that we're not doing really anything here?
I think that we're not doing anything. I think we're doing something for sure, like some limitation of executive compensation. This is a very populistic measure. Is not really biting, so it looks good on the evening news, but it doesn't do anything effective and does not address the policy problem, which is like these banks need to be regulated ex ante, and you need to intervene before the crisis hits, not afterward.
You've testified before Congress before. Why is it so difficult to get real biting regulation through Washington on an issue like this?
Oh, I think that this is a very complicated issue. No matter how Congress men and women try hard, they don't understand the details, and the devil is in the detail. And honestly, most of the experts are somehow sort of captured by the financial industry, and so most of them go in the direction of saying this is not a problem, we want to continue this way.
But you propose, and we've talked with you about this, Luigi, you talk about that basically if they're taking on more risk, they've got to raise their capital requirements. To me, this is a no-brainer, so easy to get going. So if you're a big firm, you just have more capital on hand to protect against that risk. I mean, why don't we just
do that?
Do it.
Do it.
Just do it.
Yeah.
You're preaching to the choir.
It's logical.
Yeah, try to ask a politician. I'm not a politician.
No, I know. But it goes back to what Matt's saying. It worries me that we are not going to essentially bring about any significant change here.
Yeah, and the other thing is that the large banks are lobbying very heavily to not be differentiated from the small banks. So if any requirement will be imposed, they want the requirement to be the same for both. But the reality is that if the requirement were the same for both, they would be advantaged because they do benefit from the too big to fail, the others not. Small banks fail every weekend, unfortunately.
Now, it's it's interesting. We're going to talk a little bit later about Larry Summers, and we'll talk a little bit, hopefully, about his help or his contribution in the decision to repeal GlassSteagall. Do you think that really had a serious effect? Because some people say, even if you hadn't repealed Glass-Steagall, you still have Lehman Brothers, which isn't, a commercial bank failing.
Really, I think that, first of all, the repeal was the last act of a progressive liberalization. So by the time Glass-Steagall was repealed, banks could do most of the things that were forbidden to do under Glass-Steagall. So I'm not sure that that was the turning point. But I am actually more worried from a political point of view rather than from an economic point of view. As I argue in a piece on national affairs, I think that the beauty of Glass-Steagall was that it was fragmenting the industry so that they were not all lobbying in one direction. The moment we took that out, they all consolidated their interests, so they were all lobbying in the same direction, and they were too powerful to resist.
So you think it would be a good idea to put it back in place, or some form of similar legislation?
I think that we need to do something. Maybe is a limit on size, definitely a limit on lobbying, but maybe even some sort of sharp restriction. The problem is that with the flexibility of the financial industry, it's very easy to go around most of the restrictions. So the restrictions would be very simple and easy to enforce. Otherwise, you get around that the next day.
All right, but there's really no political will to do this, is there?
There is very little political will to do that. I completely agree.
And so what does this mean about the looming economic recession? I mean, you say that the financial problems are behind us. We're still looking, obviously, at rising unemployment. And there's no will to reform the bank's problems, although there is obviously a will to boost their profits, right?
Absolutely.
What happens for Main Street?
This is the irony. I think that Governor Bernanke was very powerful when he went to sort of 60 Minutes and said, this is not about Wall Street, it's about Main Street. And the unfortunate thing is that Main Street has not seen the trickle down of this rescue. We have seen a dramatic improvement in the situation of large banks, thanks to the intervention of the Fed. We have not seen any improvement in loans to small businesses, to individuals. In fact, we've seen the opposite. We're seeing individuals losing their credit lines, losing their credit cards, small businesses losing their credit lines and credit cards, and small businesses having difficulties getting funds. So I think that we need to pass the sort of emergency mode and really try to push reforms to have more credit going to small businesses.
But you don't think a second stimulus, rather a reorganization maybe?
I don't think that, first of all, I'm not sure that the first stimulus worked that well. If you look at the projection they had, we've done much worse of the worst projection under no stimulus. Now, of course, they say we needed more, but it's a little bit like the middle-aged doctor. They were prescribing bloodletting, and then if the guy was not getting better, say you need to do more.
All right, Luigi, thanks so much for joining us. Luigi Zingales there.